Now, this is how I've seen and advised some of our small, medium business owners to solve or reduce the staff retention issue. So, of course, first issue being, culture, company culture, or whether you as a company owner, boss, develop enough growth or learning opportunity for your staff or not. So this is all about you, whether you are someone is nice, pleasant to work with, whether there's enough flexibility, if you believe in that, empower people. Now this, I don't want to talk about this because this is something that you can control. I don't want to teach you how to do that. But the other thing is, of course, it's about compensation. Now let's be direct. Every company owner will say that, okay, if I pay people more, people will not go away. If they cannot get paid more outside, then they will stay. So compensation is again is a cost to the company. So when it comes to direct compensation, we're talking about pay, and we are also talking about bonuses. Okay, but these are something that after you do that, you pay more. That's it. It's gone. So how about indirect compensation now? What are the two major things that comes in mind? Now you look at a lot of huge company. Basically, number one, they have very good medical benefit, and you might wonder, well, why should I give my staff very good medical benefit? We are not a big company, right? So it's extra cost to the company. Now stay with me, because I'm going to explain how this actually benefit you as well. Now, of course, number two is what we call as higher than 12% contribution rate. Contribution rate. Now, what does that mean? That means that your EPF. But then again, you might say, okay, if I pay my staff more EPF, like a lot of big companies, instead of 12%, I contribute 3% more, then still that is an extra cost to the company. Why should I do that, right? It helped me to retain staff, but why should I do that? Now, what if I tell you that if your staff actually resign or quit, you get to claw back that amount? Now, stay with me. So I'm going to explain like how other companies are actually doing that. So this is you, the boss, and you would have dividends. You would have so-called dividends, director fee, and also your salary paid to you on a regular basis. So this is you as the boss. So what most people do is they buy medical insurance using that kind of dividends fee or salary. Now that's just normal, right? So imagine if you even have a dividend, maybe this is your house, and then you need to buy medical insurance, and every year when you do your personal tax relief, this personal tax relief will be 3,000. And if you are actually buying for everyone, then you know that easily it's more than 3,000. So it is a bit of an inefficient way to maximize or reduce your tax being paid, because your medical premium, like it or not, you cover more than one person. A very simple medical card. Also, if you're in your 40s or whatnot, it's already cost you more than that. So again, it's very inefficient from tax standpoint. Now you could, but I'm going to actually teach you one of the better way to actually do things. Now, before you go that, whoa, that's very easy, right? I actually use my company money, and I charge under my company to actually pay from the medical insurance, which actually covers me, and also cover whoever the spouse or dependents that I have. And then when I do that, I still claim my annual tax relief of 3,000. Now, please don't do that, because that is exactly not allowed. This is not allowed. You'll be penalized by lembaga hasil of the taxman if you do something like that. That is called tax evasion or whatnot. Well, maybe not, but the thing is, you get the idea. You will be kena tax investigation. You absolutely cannot do that. right? If you are thinking of doing that, you already do it, then stop, right? Just a matter of time before you get into trouble with the tax man. What smart business owners are doing is that they use company money, and they channel it to buy a group medical insurance. So when it comes to group medical insurance, it not only covers you as the boss or whoever dependent have if you want this license, you basically also cover your staff, the entire policy. All right, and then maybe for if you really want to actually amp that up, amplify that, maybe you cover your staff family as well. Now obviously that's going to cost more, but again you just have to do some tax planning to say that, okay, this amount of tax every year, is it better to actually pay that to the taxman, or I should actually do a legally allow tax avoidance, so rather channel that money for the benefit of yourself, at the same time not only for yourself but your staff as well. And that is how, if you really provide. Now if I were one of your staff, and before I actually, if a company offer me like 10% increment, or before I actually resign, I would think, okay, but the new company doesn't provide me with a good medical plan, and that medical plan is worth much more. Okay, when I'm sick, a medical plan covered by the company is worth much more than a 10% increment. Just think about that, right? And because it's a group medical insurance, now as long as your company have like, more than 5 staff or what, it doesn't really cost you more, right? If your company is profitable, basically this is what I call as, these are all what we call as a tax deductible expenses. So it will actually reduce the tax that the company needs to pay, right? So at the same time, it actually covers you and your family. So that is the legit way to actually do this. Now, can you actually have a group medical insurance that only cover yourself? Now, you could, but that would actually defeat the purpose. Remember, we want to actually kill two birds with one stone. So you use your company money, buy a group medical, so you could structure that plan so that you as a boss will cover your dependents. It's a very, very good plan, not the highest tier, whatever that you want, right? Maybe like, 500,000 annual limit and all that. That your staff, it could be just a normal coverage, right? And then the cost itself and whatnot, it would depend on what the package that you choose. So this actually are more tax efficient. But then again, if you are a quick thinker, you might actually think like, okay, but the thing is, my company over here, I'm not sure how long my company can sustain. Can it like last for 20 years, right? Because when it comes to medical insurance, for sure you want this medical insurance to cover you as long as you live, okay? Maybe until 90 years old. But the thing is, my company, I'm not sure whether it will last for 50 years. So just for the because it's really short, so we have actually a solution for that, right? There's a few customization you need to make, which means that end of the day, you don't have to use your own pocket, right? Your own money to pay very expensive plans for yourself and your family, because as long as the company runs, this group medical actually covers that. But if your company stop running, you sold it to anyone, you don't have medical coverage anymore. So what to do? Which is why, if you want to actually know, like, okay, what's the best thing to do from there on to actually solve all this, I suggest you actually click on the button below. Okay, just below, click on the button below where we're seeing this, and might want to actually schedule a call with us, right? A one-on-one with us on, what's the best kind of arrangement for you and how much it costs. Because the fact is, when it comes to group medical card, in Malaysia, there are a lot of company, right? Insurer, I'm talking about insurer one, insurer two. So you want to actually explore, compare the option between different insurer, what is the feature, what is the most cost effective. And if you go to direct to any other any insurance company, of course they will provide you a quotation. and all that, and everybody will say their product is the best. But as an independent advisor, our role is actually to help you make a decision on which company you should take, how you structure your plan, and that's the advice, the pure advice that we are providing to our clients, small medium business owner, just like you, to say that how could actually I minimize tax, maximize my tax deductible expenses, at the same time get a very decent coverage for myself, my family, and also not to forget your staff, because the company cannot run right without some of your top, staff that you have. So we are still on this kill two birds with one stone, right? Number one, reduce your staff turnover and also reduce your tax. So just imagine you have your top performing staff, that's the two of them, and this is you. And what you normally do, as a company, you will actually try to compensate your staff, right, accordingly. Now, the thing is, even if you pay them more, if they get a better offer or if they don't like you for whatever reason, you paying them more, higher salary, if you have or even pay them instead of 12% of EPF rate, you probably pay them like 15%. The problem is when they actually resign, this money that you pay them, you cannot claw back. You cannot claw back. What's done is done, right? So what if I tell you that this is not EPF, but it still serves the purpose for what I call as for their retirement benefit, right? Retirement benefit. And this retirement benefit is called PRS, but not the PRS 3,000 tax relief that, it's not the PRS 3,000 per year tax relief, right? You might have already known that, you might have already done that, but it's not this one, right? This one is personal. I'm talking about corporate or company PRS. Company PRS, you actually use company money to say, if you have EPF 12%, and then you could actually say add another, say 3 to 5% out of their income, right, every month. But you don't contribute to the EPF because once they resign, again, it's gone. But if you say that, okay, I could actually make an arrangement to say that, okay, every of these staff open a PRS account where I use company money to actually top up additional 3-5% or whatnot, or even up to 7%, and you contribute to this individual, their PRS account, but using your company money. And what happened is, if this staff, can have a certain term and condition to say that I contribute inside this staff PRS. However, it is only a certain portion, what we call as a vesting clause. So if you stay until the end of the year, then whatever I contribute for you from the beginning of the year up until then will be yours, right? Like if they resign, that's their money. But in the middle, if they say that they resign, let's say one of our staff resign, so basically whatever that is inside this staff PRS account, company-wise, it can be clawback. It could be actually clawback back to the company coffers. And that is the beauty of PRS. In EPF, you cannot claw back. In PRS, you can claw back. It still serves the purpose of retention, giving a higher benefit, but you can claw back. Now, whatever that you already expense out, right? Every month you already expense out for the entire year, whatever here under PRS, it is also what we call as tax deductible expenses. So it would directly reduce the tax that your company needs to pay. Now, why does accountant and whatnot, you have probably never heard of this or whatnot, or how to implement, or maybe you find, even if you heard of this, you say it's very difficult to implement. And actually, it's not. A lot of accounting firm, or maybe accounting firm or whatnot, this is just not their part, their side of business, because they're doing audit accounting. But for us, we are not accounting firm, we are financial advisor. So we have advised so many business owners, when it comes to small, medium business owner, their business finances and their personal finances are actually, have a very close relation. So they always ask us this question, like, how do I actually get more money, for myself? At the same time, I'm not getting trouble with the tax people, lembaga hasil. So there's no other way, you don't even bother, right, to actually look for them. This is the best way. I could actually show you. Lembaga hasil has an entire, a law on this, on how to actually deal with this. And why I say that we are not actually replacing whatever your accountants or different are doing. This is what, this specific part, because this wealth management, because PRS is also, when you put there, it doesn't like sit there, like doesn't generate any interest. It also have, pretty decent return, 5-6% or even higher than ETF return. So in a way, there is also a way for you to actually get tax deduction, but at the same time, you're actually investing company money, right? And investing company money on your staff behalf, which if they are not loyal, you can actually claw that back to a certain extent. Now, in case that you are thinking, well, this seems like a lot of work, there could be things involved that I need to change, in how I handle these things. But the fact is, this has been in place since PRS was first introduced. Now we actually have, with our partner support, with all these PRS providers, we actually have a very robust system whereby it's plug and play. There's no change actually required in your current finance or HR or human resource workflow. So again, if this is something, the idea actually makes sense to you. Now, you probably have a few other questions that is not addressed in this session. So what I suggest you do is to click on whatever is below this button or link where you schedule a call, no obligation, just to understand more and clarify whatever you still don't get with what you have heard so far. So schedule that call below, and we actually evaluate whether actually your company can do this or not. And then if it's yes, then we actually confirm that call. If not, now the thing is, this is not for every company, so there are certain details that you need to actually fill in so that we know the company, at least you're profitable, right? Enough to actually do this. So that being said, this CF Lieu, I hope you have gained a lot of value from this presentation. Now, don't forget to actually go to our YouTube channel, subscribe. If you see that, you know what's CF Lieu channel. And I might actually talk to you soon if you schedule a call. So you have a good week ahead.